Welcome back. You're watching First Trades, and we have now joining us Ankush Malik, whole-time director and CEO of Juniper Green Energy, to talk about his numbers. Ankur, thank you very much for joining us today. You posted a phenomenal 80% YOY jump in top line and a 90% jump in EBITDA this quarter. What were the primary drivers for this margin expansion, and is this 90% operating EBITDA margin sustainable going forward?
It's mainly coming from in terms of our capacity addition, right? We were last year in FY25 at around 1100 megawatts. That capacity as on date, right, has more than doubled, right? With that capacity getting doubled, so the margins, we have been able to improve on our EBITDA margins, right? So those numbers were sitting at around 86 to 87%, and now have gone up to 90. I think this is 90 to 91% is the number that we're looking at in terms of long term, right? It was basically about us scaling up, and now that the number has come to a certain level, I think the EBITDA margins will remain at this level going forward.
And generation was up 72% YOY as well, whereas the capacity utilization factor improved to 30.2%. How much of this quarter's growth came from new capacity commissioning versus better resource availability and CUF gains across existing assets?
Right. So if you look at if you look at the load factors, right, those have improved from 28% to close to 30%, right? So that will be around 7 to 8%, right? Just because of that. But I think majority of it is because of the capacity addition, right? So if you're looking at the overall numbers increasing to 72%, so there will be 7 to 8% because of the capacity factor, but majority of it is because of the new capacity addition that has happened. So the balance would be because of, so say close to 65% will be because of the new capacity.
Ankush, having closed FY26 at 720 crores in revenue, what is your top line guidance for FY27 and over the remaining quarters in terms of capacity?
I think in terms of guidance numbers, okay, so we right now have numbers which are on a in terms of capacity, right? We're looking at closing the year at an overall capacity of 4 gigawatts, right? For which 4 gigawatts is the overall capacity. So the revenue for this capacity is close to 2,500 crores, but this is the run rate. This is the run rate EBITDA, right? So of course, as and when the capacity comes, this is a run rate level capacity revenue. I think in terms of growth, so we've already clocked a 30, I think from last quarter, right? On a quarter to quarter, it's a 33 or close to 35% increase, right? We expect, I think, similar increases in the coming quarters, right? If not 35, closely in the range of between 25 to 30, right? And that's how our revenue will grow.
Okay, and you recently signed a 50 megawatt FDRE PPA with SJVN at 4.25 a unit, estimated to bring in roughly what, 80 crore annually. When does this project hit full commissioning? If you can give us that perspective, and what's the overall revenue visibility from this scheme in particular?
Right. So we have 24 months for commissioning this project, right? So in terms of this capacity, we under the PPA we'll have timelines up till August of 28, right? Of course, we do have plans to commission it earlier. It's not the capacity for renewables in under this will be around 80 megawatts of solar, right, and around 400 megawatt hours of battery. Which is not very significant, right? We already have the grid connectivity and the land available for this capacity. So even though we have 24 months, I think we can probably do it a little earlier, probably between March to June of 28. That's when you're looking at commissioning this.
As an IPP, how significantly does the current extension of the ALMM to exemption benefit your capital costs, and what kind of margin or IRR uplift does this provide to your upcoming solar pipeline?
So in terms of the ALMM 2 exemption, so see, all our capacity till date, except the last tender that we won on the thermal mimic, right, which was the SECI RTC FDRE, everything is actually on ALMM. So there is nothing on ALCM, right? So we fundamentally don't stand to gain out of any of the exemption extension. It's all our projects, right? Because we are utility, right? So all our projects as such are have this exemption free, right? And the module prices on ALMM have been pretty low, right? So we definitely do gain out of it.
Okay, and your BESS portfolio is expanding aggressively with over 4,000 megawatt hours ordered and a massive target of 10,000 megawatt hours by March 2028. How are you navigating pricing dynamics, supply chain security for a battery scale up of this magnitude?
Right. So see, we've already contracted 4.5 gigawatt hours, as you mentioned, right? So 500 megawatt hours is already installed. We were actually the first ones to install uh, BESS in the country, right? In terms of the first merchant BESS that we commissioned in December last year. I think it's a very the entire 4.5 gigawatt hours is built on the same principle. It's with the same entity, which is Envision, right? For this 4.5, we already have the substations and the evacuation ready, right? So it is more or less about the batteries coming in and getting installed. There's not a lot of execution risk on this entire thing, right? So the 4.5 will now start getting installed right from September this year, right? So from September this year till June, we'll get batteries and they will keep on getting installed. What we are now doing is we are now for the balance 5.5, right, which we're looking at March 28. We are now building. In some cases, we do have the evacuation infrastructure. In some other cases, we are building that evacuation infrastructure. That evacuation infrastructure will take another 12 months to come in. And then batteries start coming in from June of 27 till March. Now there we have already now started talking to the OEMs, including Envision, Sungrow, CATL, right, other leading names for battery supply for those projects, right? So that's how we're looking at the overall thing.
Ankush, how is the company thinking about geographical diversification beyond Gujarat, Maharashtra, Rajasthan, and MP?
I think of course, these four states, right, have enough potential for future growth. But what we have started doing is we've already expanded into Karnataka, right? We are developing a couple of sites in Karnataka. We already have a team there right now. We have a small office in Bangalore. We started doing development. I think a couple of other states that we're looking at, and these generally are the only ones then remaining of the other states, right, is Tamil Nadu and Andhra Pradesh. Once we grow into Karnataka, we have a team then specific sitting out of the south, right? We'll post the first couple of projects. We'll then start looking into the other two states as well, right? So right now in these four states, we're now doing development in Karnataka and then probably look at Tamil Nadu and Andhra at a later point of time. Right?
Okay. Well, thank you so much for coming in, giving us that perspective. We'll let you go on that note.